So what I want to do today is I want to talk about two main things. The first thing that I want to talk about is just kind of my story, how exactly I got into trading, where I started, things of that nature. So let's start from the beginning. I got into trading, well, investing or interested in the stock market a long time ago. We're talking really around 12 or 13. I still remember telling my parents to invest in Apple and to invest in Tesla. And I remember being a little kid and I remember doing some research on Tesla and figuring out that at the time it was a private company, so I couldn't invest in it. I even remember telling them, I said, well, actually, never mind, you can't invest in it. It's private right now. Maybe one day it'll go public. Too bad they didn't listen to me on both of those things. But so I got my start in the markets really young. But I didn't get good at trading until later on in life. So all through high school, I was interested. And then right when I turned 18, I opened my first trading account. It was with Scott Trade, I believe. I opened my first trading account. Sorry, guys, you guys still there? All right. So I opened my first trading account with Scott Trade right around 18 years old, as soon as I could. And I remember being so excited to invest in the markets. At that time, I had a couple of thousands of dollars saved up. Well, it wasn't that great. So I started with investing. I taught myself through high school how to invest. So I taught myself how to, what's up, man? How you doing? I taught myself how to read balance sheets, how to read income statements, how to read cash flows. I taught myself how to discount cash flows, which is, as you guys know, or maybe you don't, that is the main way most investors, at least the basic way of most investors, how they get valuations for companies. So I taught myself this back in high school. And I really struggled with investing because at the time I was investing, not trading. And I really struggled with this because I didn't really like it. That's just the honest truth. I was passionate about the markets. I loved the stock market. I was always, there was something about it that just drew me to it. But when it came to investing, for some reason, I just didn't like it. It didn't match my personality. I didn't like going through the balance sheets. I didn't like going through the income statements. I didn't like discounting cash flows. And at the time, I was doing everything by hand. Of course, now I know that there are websites and stuff of that nature that'll do all that for you. But I was doing all that work by hand because I really wanted to learn the process. And I hated it. I hated it and I was not good at it. So that lasted really through high school into college. And I really just did not understand how to invest. So moving into college, I got my degree in finance. Little side note, do I think you need a degree to be a trader? Absolutely not. It hasn't taught me shit when it comes to trading. So that's a little side note. But at the time, I thought more that I was going to be an investor, things of that nature. So moving into it, moving into college, I really thought that I was going to be an investor. So I started in finance, got my degree in finance all through college. I really learned more of the basic stuff, relearned the right way to do discounted cash flows, learned about CAPM, which is the capital assets pricing model, which I had learned about already. I had taught myself pretty much, knew about beta, things of that nature. And, somewhere in college, I lost interest in the markets. I thought maybe they weren't for me, right? So I did go through a down phase, and I think everybody does. And the reason is because at the time I was still investing and I was not trading. And I really didn't. I knew that trading existed. I knew that technical analysis existed, but I was still focused on investing. So it wasn't working for me. So I did go through a downtime there where I really didn't think that the stock market was for me. But as I progressed through college, I started to figure out, I started to learn about trading a little bit more. And I started to say, look, I have a passion for the markets. I love the stock markets. And I did. I love the stock market. I love the potential to make thousands of dollars in minutes, literal minutes. I love the potential to grow an account from 10,000 or 100,000 to a million. I've always been extremely passionate about the stock market, but I was going about it through investing because I thought that was the only way to do it. And in college, all through college, they tell you how investing is better, fundamental analysis is better, long-term outlooks is better. They talked about market efficiency hypothesis, they talked about random walk theory, all these things that say that really that it's impossible to predict the movements in stocks, and it's impossible to predict where a stock is going to go. They really thought in academics, in college, they teach you, at least in finance, at my school, they teach you kind of invest for the long term. Get a market portfolio. The only way that you're going to make more money in the market is to leverage that same market portfolio, which means you're investing in the general market, the S&P 500, the Dow Jones, a combination of both. And the only way that you're going to increase your returns, so let's say you don't want to earn 8%, you want to earn 16 or 24, well, then you need to leverage that account. And that's really all they taught. It's interesting. So I was a finance major, and really what turned the corner for me was when I took psychology classes. So I took a behavioral economics class, I took a human psychology class, and I started to realize that all these theories in finance are based on economics. All these theories and these academic things that are taught in finance, they're based on economics. And what is the core principle in economics? For all those of you that know about economics, one of the main principles in economics is that people are rational, that people act rationally, that if you gave them two separate things, that they're always going to pick the better of the two for them. Well, when I took my psychology class, a couple of them, and I had an excellent teacher, really excellent teacher, and I took these classes, and I started to realize that people are not rational, that people don't think rationally, that it's impossible for a human with emotions to think rationally. So all the stuff that's taught in finance in school, all the stuff that's taught in finance because of economics is really, it doesn't hold true. So really this is where I started to reemerge as a trader. I started to say, okay, so random walk is not really true, and market efficiency hypothesis, really not true. We have seen this before. But these psychology classes really opened my mind, and I started to really dive into trading. How can I trade? How can I take advantage of these people's emotions, pretty much? How can I use people's emotions? Because the market, remember, the market is just a group of people all trading. A group of people, a group of banks, but at the end of the day, it's a bunch of people and a bunch of people's money traded in the market. So how can I use those key things to become a better trader and to profit in the market? So this is where I started to move away from fundamental analysis, where I started to move away from long-term investing, and I started to move to trading. So I'm going to answer the question here. I've been trading for about 3 months, but about 60% of my trade is last. I am trying to learn, but I don't know where to go. I would definitely join the free 7-day crash course, my friend. Link is in the bio, absolutely free. That's a great first place to start. But anyways, so and I'm just going to be short on the questions just right now because I want to get through this story. I think this is very important. So this is where I started to figure out that trading might be a better thing for me. How can I use this? How can people, when you put people in the same situation over and over and over again, they tend to do the same thing. And if you look at 2008, 2009, when we got the stock market crash, the most recent recession, people did the exact same thing that they did in previous crashes, in previous recessions, all the way back to the Great Depression. And that is that people always assume that when there's a recession or depression, that it's never going to get better. So people sell at the very lowest and they buy at the very highest. So this kind of proves that, look, it doesn't matter how many times it happens in the past, it repeats itself. People's emotions are very strong and people just are afraid. Fear and greed are the two biggest emotions in the stock market. So these repeatable patterns means that trading is possible. These repeatable patterns means that trading technically, using technical analysis, is possible, because if we can identify these places where people are going to act the same, or at least there's a higher chance that they're going to act the same as they have in the past, then we can profit from that. And that is the basis to price action trading. That is the basis to technical analysis when it's used right. See, so many people think that technical analysis they think that they're going to get a crystal ball where they can just predict the markets and they can predict everything that's going to happen in the future. And then they go and they realize that technical analysis is not that, so then they lose faith in technical analysis. But in reality, what technical analysis is, it's a tool to help you better see how people are reacting in the markets, how people's emotions are getting the best of them. So when we see a pattern or a setup, the reason why we're taking the trade at that pattern or that setup is because in the past, people have reacted in a very similar way multiple times. So this gives us the best chance of being right. Now that's another thing. That's why I'm so into trading statistically and trading using a strategy that has been back tested, because we want to make sure that our strategy is profitable. We're not going to be right every single time. We're just taking setups that we have the highest chance of being correct. And as long as we make more money than we lose during these setups, we can profit in the markets. So this is where my mind started racing. My mind started going crazy, and I started to realize the potential if you learn trading properly. So that's where I started. And that's really, at that point, that's the moment where I transitioned into trading with technical analysis, trading technically instead of fundamentally. Now, a lot of you know that I still use fundamentals, I still use macroeconomic trends, but those are for bigger trades. If I'm going to trade a large portion of my account, or I'm going to leverage my account, I want to use the big three, as I call them, which is technical analysis, fundamental analysis, and macroeconomic analysis or macroeconomic trends. But for everyday trades, for trades that I take every day, whether it's a day trade or a swing trade, most of the time I am swing trading, it's going to be based on technicals. And it's because of that revelation, thanks to my psychology class, thanks to realizing that psychology is such an important part in trading. So thanks to that class, I really started to realize where technical analysis comes in. So it's interesting coming from somebody who has a degree in finance. And like I said, I don't think you need a degree to be a successful trader. In reality, 99.9, I would say 100% of the shit that I learned in my finances class, I've never really used when it comes to trading. I've used more the stuff that I've learned in psychology. If I could redo my college career, well, I probably wouldn't go to college. That's the honest truth. But if I had to go to college, I would have taken something else. I would have taken human psychology, behavioral psychology, or behavioral economics, something where we're mashing psychology with business, because that is really the potent way to trade. So after that, the rest is kind of history. Took a little bit of time, beat my head against the wall. The process took about 2 years to really start understanding what I'm doing. And that's really how Finance and Chocolate was born. I've been a trader for about 6-7 years now, coming up on 7 here at the end of 2017. So it took about 2 years. I just banged my head against the wall, didn't want to get a mentor, didn't want to take a course. I thought I could do it all myself, and I really struggled because of that. So that's kind of how Finance and Chocolate was born. I kind of told myself that if I ever got good at this, if I ever became a successful trader, I would create some sort of platform in order to help others become traders. Because I think that there's a lot of bullshit on the internet, and I think that people have the wrong mentality when going into trading. So that's how Finance and Chocolate was born. And like I said, the rest is history. I really want I want Finance and Chocolate moving forward to be a close-knit community of people who want to learn how to trade, or people who have already figured out the way of trading. I want this to be a community where you can come and you can learn the right ways of trading. And that's why I offer the 7-day crash course for free, because I want you to, one, know who I am, know that I know what I'm talking about, and really be comfortable with me. I do my best to always offer free things, whether it's live videos, whether it's the free 7-day crash course. I'm always improving the free 7-day crash course. And once you're on my email list, you're always going to get awesome content. I'm always adding to the email list. I'm always adding content there because I want to provide a lot of free content. When you see one of my emails, I want you to say, oh, Derek is sending, or Finance and Chocolate is sending me something. I want to check this out because it's usually fucking awesome. So that's really what I want Finance and Chocolate to be. And then the 10-hour course, where does that come into play? The 10-hour course is, I want it to be the best trading course out there. I want it to be that if you take the 10-hour course, I want you to fully understand what the hell is going on in the markets. That's really what I want, because I don't think that a course like that exists. And I'm going to continue to add and add and add to the 10-hour course until it's exactly how I want it. I want the 10-hour course to be that course that you can take and you can go through and you can say, I truly understand what I'm supposed to be doing now. I truly understand what trading is all about, and I truly understand how to move forward and how to profit from the markets. The 10-hour course is already there, and it's already awesome. We have great reviews on it, but I want to make it better, and I need your help. So everybody who's in the 10-hour course, how much does it cost? Currently, it's on discount, my friend. Shoot me a DM, and I'll send you the discount code. Because like I said, I like to offer discounts as much as possible. I want to get into people's hands, people who actually want to learn. So as I was saying, I need your help. I really do. I need your help. And what I need your help is those of you that are in the 10-hour course, I know that there's a lot of you. There's a lot of you. And by the end of 2017, it's my goal to help 100 more traders. All right, I'm not like some financial educators who they want to help 10,000 people. I think that that's great, but I like keeping it small. I like keeping it small because the smaller, the closer knit the community is, the more often I can interact with you. If you've ever communicated with me on direct message or through email or something of that nature or something like that, you know that I try my best to communicate with you guys. And the only way to do that is to keep the group small. So I want to finish 2017 strong. I want to help 100 more traders. And then 2018, I want to keep it right around 500 for the whole year. 500 students that go through the 10-hour course. The reason is that's small enough that I can interact with you guys. Really, that's about the size of a college classroom. At least in my university. I went to a public university, a very good university, but it was public. So the class sizes were 300 to 500 students. So that's what I want to keep for next year going forward. I want to keep the group small. But for those of you who are in the 10-hour course, how can you help me? Well, as you take the course, I want you to take notes, for one. And every single time you don't understand something, I want you to send me a message, whether it's on email, whether it's through direct message here on Instagram. I'm very active here on Instagram. I want you to send me a message. And the reason is because when somebody says, hey, lesson 3 was awesome, I really loved it, but I don't understand this little part. Can you go over that again? What that allows me to do is that allows me to add to the bonus content. So basically everybody who's in the course, every single time I add something to the course, your link is automatically updated. So when I add to the bonus content, it improves the experience for everybody. So I really want this course to be interactive. I want you guys to interact with me. And when you have questions, I want you to ask me those questions because I truly think that interaction is the key to success. And that's why I ask the coin flip question on the 7-day crash course. If you're signing up for the 7-day crash course or if you're in the 7-day crash course, answer the coin flip question. It's not if you get the answer right or you get the answer wrong. The reason why I ask you to answer that question is because I want that interaction. Because I believe that if you want to learn, you have to interact. You have to. And Shawan 11, I hope I'm saying that right. I got your DM. I see it right now on the screen. So once this live video is over, I will shoot you a DM back. But so that's really what I want about the 10-hour course. Everybody who's interested in joining the 10-hour course, look, it's awesome. If you want me to send you some reviews or something of that nature or a preview, please send me a DM and I'll gladly do so. For those of you who are eager to learn, I like to reward those who are action takers. I call them action takers because I feel like a lot of people get amped up, they're ready to do something, and then say, yeah, but I'll start next month or I'll start in 2 months. And look, don't get me wrong. If you have to start in a month or in 2 months because of financial reasons or because you're busy or something of that nature, I totally understand. But I think that there's a lot of people who just say, oh man, I can't wait to get started, but I'll start next month. And the reason why people do that is because of hope. So that hope, they say, yeah, I'm going to do it this time, I'm ready. That makes them feel good. It makes them feel like their future is going to be great. But I'll start next month. That gives them still a month to kind of feel good, but they don't have to do anything. So I feel like that's a big problem. That's a big problem with anything, whether it's trading, whether it's business, whether it's education, whatever you're getting into, you have to just start. You're never going to be ready. You're never, ever going to be ready. That's just the honest truth. So if you want to start, if you want to take that step into trading, the 10-hour course is for you. Truly it is. It's great. It's awesome. There's tons of reviews on it, and it follows the 7-day crash course perfectly. Moving from the 7-day crash course into the 10-hour course, you're starting at the right place when it comes to your trading. If before you've taken courses and you didn't get a lot out of it, I urge you to take the 7-day crash course so you can kind of see who I am. It's free. And I urge you to just take it to kind of get a feel for who I am as a trader and if you like me as a teacher. Because you have to like me as a teacher. And that's another reason why I want to keep the group small, to around 500 next year, only about 100 to finish off this year. And the reason is because I want those who are interacting with me, those who are in the course, I want you guys to like me as a teacher. All right, that's super important. So if you're interested in the 10-hour course and you're interested in taking advantage of that discount, I would shoot me a DM. Another thing, I know some courses out there cost like $4,000 or $3,000. Not here at Finance and Chocolate. Rip Pup, great guy, very personal, best one-on-one trader coach I've come across. Dude, I truly appreciate that. I really do. I really do. And that's really what I'm aiming for here, is I want to have that interaction, and that's why I want to keep this small for as long as I possibly can. So, Rip Pup, I appreciate that. I really do. And I cannot wait. I cannot wait to show you the content in the 10-hour course. I cannot wait till you start. I know you're starting very soon, so I can't wait for that. I think you're truly going to be blown away. But everyone else who's watching, so that's kind of my story. That's kind of how I started trading and where Finance and Chocolate comes in and all of that. But I want to answer another question. So one of our students asked, pretty much he was talking about, I believe it's Canopy, if I remember correctly. Let me hold on. Let me pull up my computer here. I believe it's Canopy. It's a marijuana stock, and it's in Canada. And basically, I haven't done too much research on this, but basically, supposedly Canada is going to legalize marijuana here in a little bit. I'm not. Don't ask me. I haven't done research. I don't know yet. But basically, what one of our students was asking was, when does he transition from trading to investing? So he likes this, Canopy Growth, that's the one. So he likes this company, but how do you transition from trading the company to investing the company? And in my mind, you don't. All right, you don't. So what you really do is you have to see investing and trading as two separate things. You have to see trading for what it is, and that's making money in the short term or the long term based on technical analysis. Usually the real definition of trading is taking advantage of price action, right? So you're taking advantage of the moves in price. That's really what trading is. Investing, you're not taking advantage of the moves in price. You're taking advantage of an underpriced or undervalued asset, or something that you believe is going to increase in value in the future. So they're two separate things. Can you trade and invest in the same company? Absolutely. But if your account is large enough, I would do two things. I would completely have two separate positions. I would have a trading position that you can enter and exit, and then I would have a regular long-term position sitting in the same account. If that's possible in your account, that's a great way to do it. But you have to understand that trading doesn't turn into investing. I think what a lot of people think is that, well, I'm trading, and then if I have it open for a year or 2 years, now I'm investing. That's not how it works. People think that investing means long-term. People think that trading means short-term. And while usually that's true, it's not always true. Investing, you can invest for a month. If you find an undervalued asset, let's say you discount the cash flows, you know that the CEO is being replaced or something of that nature. There's things going on in the company, right? Now, of course, not insider trading, because it's illegal. But I'm saying you have some sort of information that you think is going to be beneficial for the company, right? So you do your research, you dig all these things out of the back end of the company, you dig all these documents, and then you come up with a price for the stock. Let's say you come up with the price of $60, right? And right now the price of the stock is $40, right? At that point, you're making an investment. You're making a value investment. So if let's say you invest at $40, and 2 weeks later, the stock is trading at $63, right? Well, now you're done with your investment. At that point, you have an asset that is valued fairly. You can either readjust your projections into the future, or you can say, look, I think that's a fair value for the company, and you can either hold or you can exit your position. That's an investment. Okay, that's an investment, because you're investing in the value of the company. So an investment doesn't have to be long-term. Usually they are long-term, but it doesn't have to be long-term. And then a trade, on the other hand, if you see a huge double top on the week chart, and it takes 3 years to form. Or you see a huge ascending triangle or descending triangle, or you see a huge head and shoulders, some sort of price action pattern, right? Or you use maybe a couple of indicators and your RSI is triggering, or whatever your strategy is, right? And you're looking at the week chart. That means each candlestick is 1 week. So let's say this is taking place over 2 or 3 years, and you enter that. And let's say it takes another year for your position to do what you want it to do, to make you a profit. That's not investing. That's trading. Now, of course, when it comes to some sort of taxes, depending on where you're located, a lot of times that can be considered a capital gains if you hold it over a year. But that has nothing to do with investing or trading. All right? What that has to do with is trading is based on price action, or trading is based on the taking advantage of a movement in the price action of a stock. So it doesn't matter if it's 2 or 3 or 4 years to create that head and shoulders, and it doesn't matter if it takes another year for that head and shoulders to finally break and to make you a large profit. It doesn't matter. That's still trading. So when it comes to something like Canopy Growth, which this person wanted to figure out when they stop investing and when they start trading, they're two separate entities. They're completely two separate things. Trading is different from investing, period. So you have to treat them separately, and you have to really you're using different things to accomplish different things. So I still trade based on fundamentals, based on macroeconomics, and based on technical analysis. When I put those all together, a lot of times I'm shorting it. So if I see a macroeconomic trend that's downward and I see a company that's fundamentally overvalued and then I'm taking a short position, I guess I'm technically not investing. I'm like reverse investing, but it's still using those fundamentals. It's still using those macroeconomics. And then I'm using technical analysis to pick where I'm going to enter and to pick my stop losses, my risk management, my take profits, things of that nature. So I guess that's kind of a combination of both. I would still say really at that point, I don't know if I would classify that as an investment or as a trade, because it's kind of in the middle. I'm investing in a company because I think, let's flip that. Let's say I'm investing, I think the company is going to grow in value, right? Because I looked at the balance sheet, no debt. I looked at the cash flow statements, positive operational cash flow, and I looked at the income statements, and they look pretty solid over the last 5 years, right? So that's investing. That's investing, right? And then macroeconomically, the industry is strong. I think the industry is actually undervalued, whatever, right? That's investing. But then I go to my charts and I say, okay, this is a good place to enter, or this is a good place to put my stop losses, or this is a good place to put my take profits. That's trading. So I guess really that would be investing using technical analysis or using trading to place entries and exits, right? So, or I guess you could even... What's the longest you hold trades for usually? I'll get to that in 1 second, man. So I guess you could even say that could be possibly trading. The reason is because my take profits are based on technical analysis. I guess if I were truly investing, at least from a value investing standpoint, my take profits, or where I would exit for a profit, would not be based on price action. It would be based on the fair value of the company. So that's why it's kind of like that's kind of like a gray zone. You're using both, but usually investing and trading can be separately. So maybe that's what one of our students meant. If you're watching this, I think you said, I don't know if you said you were going to be busy, but if you're watching this, if not, it'll go on the live story for 24 hours. If you're watching this, maybe that's what you meant. Maybe you kind of meant that you wanted to use technical analysis to enter and exit, but you wanted to use fundamental analysis to analyze Canopy Growth as a company. Maybe that's what you meant. I guess that's a gray area, and I guess that's one of those instances where you're kind of combining the both. But usually investing is based on fair value and an undervalued asset, or an asset that you think is going to grow in value in the future. So if you purchase if you're investing and you purchase something right now, either A, you think it's worth more currently, or B, you might think that it's a fair value currently, but you think that the prospects in the future are going to make it increase in value. One of the two. Trading is based purely on price action and taking advantage of movements in price action and human psychology, human behavior, and taking advantage of the fact that people act the same in similar situations. Bryce, what is the longest you hold your trades for? It's a good question. So on average, just on average, usually my trades are open from anywhere between about a week to about 3 weeks on average. But I do day trade. So ever so often I will day trade if I see an opportunity, but I prefer swing trading. So they can be as short as a few minutes. Usually when I day trade, it's usually for 20, 30, 40 minutes. I'm not a scalper. I don't go in and out too much. But maximum, I've held trades for multiple months. A couple of the ones that come to mind are the ones that I talk about a lot on this channel because they are some of my most profitable trades. That's my trade in iron ore this year, both on the upside and on the downside. I caught both moves, and that was an excellent trade. And then in 2014, my GTE trade and my trade in oil. Really, I traded oil when oil went down to like $26. And I just knew the whole time that's not sustainable. It's just not possible. Like oil cannot be $26 for multiple months. It's just not possible. So that was another trade where I used fundamental analysis and macroeconomic trends. The oil part of the trade was macroeconomics. The GTE part, Grand Tierra Energy, that was the fundamental analysis. So I found an industry that was undervalued, oil, and I found a stock. I could have traded with commodities or something of that nature, futures or something, but I chose to trade the stock because that's what I'm most familiar with. So I used macroeconomics to find the industry. Then I broke it down fundamentally, and I found a company that had, at the time, no debt, it had a line of credit access to 150 million, something like that. And this was a small company, so that was a lot of money for it. Hadn't been touched, and it had like 300 million in cash sitting in the bank. So I found a company, and the CEO was being replaced at the time by a CEO who really knew what he was doing in the oil industry. So all of that, I found a company, found the industry that's undervalued, found the company that the only reason why it was trading at the low price that it was because of the oil industry being undervalued. And then I used technical analysis to pick my entries and exits. So that trade multiple months. So really it could be anywhere from a few minutes. If I'm day trading, don't really do day trading too much. So on average, it's about 2 to 3 weeks, but it can go more. If like SQ, I don't know how long I've been holding SQ. SQ's been a while, right? And that's been an excellent trade. That's another trade that I need to add to my book of really good trades this year was my SQ trade. I've been holding that since like, I guess actually that's not too crazy. I've been trading SQ since like July, but like the most recent leg of the trade was last month. So that's about a month. But really before that, I had held it on the upside as well for about a month as well. So it can go anywhere from a couple months, or I might get in and out depending on if I see some resistance. I might get out and then I might wait for it to break that resistance and then re-enter, things of that nature. So I hope that answers your question. I urge you guys, I really do. If this is something that you want to do, and you're watching this live video and you already like who I am, you can understand that, look, I'm here to help. That the way I talk, if you like the way I talk, this is how I'm going to teach. I might say fuck and I might say shit here and there. It's who I am. I'm just very blunt and to the point. If you don't mind that, and you like the way I teach and stuff of that nature, what oscillator are you using? I don't use any oscillators. So that's another thing that you'll learn in the crash course and in the 10-hour course. I'm really a price action trader only, and I use mostly just price action because it's the simplest and it works the best. So what I like to do is I like to take simple concepts and do advanced back-end stuff. So I take a very simple trading concept and I do an advanced set of back testing or an advanced set of strategy testing, an advanced set of risk management, things of that nature. So my genius is not so much on the oscillator that I'm using or the setups that I'm using. My genius when it comes to trading comes from the stuff that most people don't talk about, which is the back testing, the risk management part of that, putting together all of that, and really combining that to make something simple, a little more advanced, and using it properly. And then, of course, discipline. I'm very disciplined. And that's something that you guys are going to realize very soon. If you haven't traded yet, you're going to realize very soon how important discipline is. I can take a loss like that. I don't give a shit. I can take 10 losses in a row like that. I don't care. If my strategy says to trade it, I'm going to trade it. And the reason is because I'm confident in my strategy, and I know long-term that it makes me money. So discipline is a huge part of trading. And that's probably one of the most difficult parts to overcome. We have a lesson on the 10-hour course just about discipline and about some of the things that really that come from the outside world. So a lot of these indoctrinations that help you operate as a human in your job, or that help you operate as a human in your social life and things of that nature, that's all great. But when it comes to trading, you have to cut that off, get rid of it, and you have to trade like a robot. And that's very difficult for a lot of people to do. Emotions have no place in trading. So That's really where my genius comes when it comes to trading, is the back end stuff. And just being disciplined. Like I said, I can take 10 losses in a row like that. I don't care. I'll get up every single day. I'll say, I'm losing, exit the trade. Boom. Next day, losing, exit the trade. Because I understand that it doesn't fucking matter. And we talk a lot about this here at Finance and Chocolate, about statistics and things of that nature, and how you don't need a 98%. Everybody talks about, I see it all over Instagram. I don't get it. I don't get it. I guess it sounds good. I don't get, everybody touts that they have like a 95% accurate strategy. Who gives a fuck? Like, coming from a real trader, who the fuck cares? It doesn't matter. And I'll give you the example that I always give people. If you're accurate 95% of the time, that means really you're accurate around 9 out of 10 times, right? But you make $1 every single time you're right, and you lose $25. And of course, I'm keeping the numbers small, so it makes sense. Of course, the numbers would be a lot larger, maybe 100, 200, maybe a couple thousand, but let's keep them small. So you lose $1, or you win $1 every single time you're right. You're right 9 out of 10 trades. So you win $1 every single time. But then every single time you're wrong, you lose $25. I don't give a shit that you're accurate 9 out of 10 times. Your strategy is useless and it doesn't work. Now let me flip that. If you guys haven't looked up Richard Dennis and the Turtle Traders, I urge you to do so, because it's going to enlighten you a little bit. So let's say we have a strategy that's accurate 20% of the time, right? That means 2 out of 10 trades. That's the only time that we make money. But every time that we're wrong, let's say we lose $1, right? So we lose $8 out of 10 trades, right? 8 times 1. But every time we're right, we make $10. 10 times 2, that's 20. Now that strategy actually makes money, but you're only accurate 2 out of 10 trades. So accuracy doesn't fucking matter. Nobody gives a fuck about accuracy. Everybody touts it because it sounds good, but another reason why is because people who are new to trading, they see that and they say, oh, this guy must be great. And I'm not saying they're not. Don't get me wrong. I'm not stepping on anybody's toes. If you have a strategy that makes money, that's all I care about. If you have a strategy that's 95% accurate and it makes money, you're a good trader in my book. If you have a strategy that's only 10% accurate but it makes money, you're a good trader in my book. It doesn't matter. So I'm not stepping on anybody's toes. I'm just saying that I think a lot of new traders chase the 80% or the 90% accurate strategy for 2 reasons. One, because they're not disciplined. If they took 8 losses in a row, they would not have the ability to take the 9th trade or the 10th trade. They just wouldn't. Most people wouldn't. Your emotions would go crazy. You would completely lose your mind. And that's why discipline is such an important thing. Because I could hand you a strategy right now. That works brilliantly. And if you're brand new to trading, you probably wouldn't make money on it because you don't have any of the back end stuff that I talk about. And that's really what the 10-hour course is about. All that back end stuff, the psychology, the back testing, the forward testing, the split testing, the scale ins, the scale outs, all that kind of stuff that really, really is important. Do I back test? Absolutely. I think everybody should. If you're not back testing, I mean, I know traders that are profitable who don't back test, but they're probably, one of 2 things is happening. If you're not back testing, you're either not making money or you're leaving money on the table. You could be making more money because that's how you tweak your strategy and make your strategy better. But so the 2 reasons why people like high accuracy strategies. If you're new, it's because you don't want to take 8 losses in a row. That's just the honest truth. And B, because it sounds good. Oh, well, if somebody's only right 10, 20, 30, 40% of the time, they must suck at trading. That's what people who are new to trading think. So the 95% or the 80% accurate strategy makes new people or new traders feel good about it and makes them want to do it, right? So, but here's the problem. If you think that you have to be accurate 80% of the time, or 70% of the time, or 90% of the time, whatever, if you're a new trader and you think that you have to be accurate that much, those things, they're going to be expectations that you have for yourself. So in a month of learning, or 2 months of learning, or 3 months of learning, these expectations that you have of yourself, when you don't hit them, because let's say you start being accurate 50% of the time, right? Like almost like flipping a coin. You're accurate half of the time, 50% of the time. But in your mind, you think that you have to be accurate 80% of the time to be a good trader. You're going to start getting down on yourself. You're going to start thinking that you don't know what you're doing, or that the information that you have is wrong, or that the course you took is wrong, or something of that nature, because you put this huge expectation in your mind. And if you don't hit that 80% accuracy mark, you must not be a good trader. When in reality, if you're accurate 50% of the time, if you're accurate half of the time, at that point, you don't need to worry about your strategy. You're accurate enough. What you need to start worrying about is tweaking your risk management, tweaking your stop losses and your take profits so that you make money. That's really it. It has nothing to do with how accurate you are. If you're accurate 50% of the time, your strategy, you're good. You're good to go. Like, your strategy is fine. Now it becomes a thing of tweaking the back end and figuring out how much profits I should be taking, when to take the profits, where my stop losses should be in order to generate money. That's really at that. So if you're accurate 50% of the time, it's more of a risk management thing. It's not that you don't know what you're doing or that your strategy doesn't work. It means that your risk management needs improving. That's it. Valuable nuggets. Thank you. Absolutely, man. What's up, dude? Viz, what's up? So I hope that was helpful. Yes, absolutely, you need to backtest, and that's the reason. I knew there was something else I wanted to say. That's the reason why backtesting is important, because if you have this strategy that's 50% accurate, or even less, 40 or 30% accurate, I'm telling you guys, look up Richard Dennis and the Turtle Traders. Look up how accurate their strategy was. It wasn't 80%, trust me. So backtesting allows you. So it allows you to take a strategy that's working, but maybe you're not making money for a couple of reasons. It could be your stop losses, it could be your take profits, it could be the type of asset you're trading, right? So maybe your strategy actually works better on a sorry, man. Like I said, I don't, some of your names I butcher, you guys. I'm sorry. But it could be your stop losses, it could be your take profits, it could be even the asset that you're trading. Maybe your strategy, it doesn't work with a high beta stock. Or maybe it doesn't work with a low cap stock. Or maybe it doesn't work with Forex. Or maybe it does work with Forex, but it doesn't work with stocks. That's why backtesting is so important. And that's why every really good trader probably does some form of backtesting. I know there are traders out there who are almost like they just trade by the heart and they're very good at it. But for the most part, for most traders, for most of you, you want to have a strategy that's proven based on math that it works. Like I say all the time, you don't have to be good at math. All my high school career, all my college career, until about halfway through college, I sucked dick at math. You don't have to be good at math, but you want your strategy to work based on math. You want some basic statistics to tell you, to prove to you that your strategy actually makes money. That's what the 10-hour course is about. So I know a lot of you guys are going to jump into the 10-hour course just from past experience. We're getting great reviews. So if you want reviews or you want access to the 10-hour course, send me a direct message on Instagram. This is where I'm most active. You can also get me through email, but really I'm most active here on the Instagram platform. So other than that, I'm gonna leave you guys here. Currently the World Series is going on. I'm from the LA Basin, so those Dodgers, man, you got to root for them. So I'm gonna go watch that. I hope this was informative. I hope that you guys took value off of this, and I hope to see you not only in the next live video, but in the 10-hour course as well, because I know you guys are gonna love it. So this is Derek Polishek. This is Finance and Chocolate. As we always say here, trade smart. I will see you in the next video.